So I'm a real estate investor, and when it comes to investing, I usually just stay in my own lane. I invest in the things that I know, don't invest in the things that I don't. However, after watching this clip, I just had to comment. So I want you to watch this clip. It's not very long, but then I want you to tell me what your thoughts are in the comments.
All right, this is the market in the last 48 hours, of course. Taking a look at the Dow, big comeback today after a big beating yesterday. The same for the NASDAQ. So what do you buy, the free fall yesterday or so far the comeback today? Peter Eliades, the Stock Market Cycle editor and publisher. We're certainly not buying a bull market, at least for the longer term. Peter, what do you think? You've been looking this apart from all these, fundamental developments, because you read the technicals. And what do the technicals tell you?
Right now, the technicals are getting more and more bearish. But the one fundamental thing I like to look at, Neil, at extremes is valuation. Valuation is completely useless, usually. It can give you an idea when you get to real extremes on the low side or on the high side. My favorite valuation metric is by John Hussman of Hussman Econometrics. And on July 22nd, Neil, Hussman said that on Tuesday, July 16th, his valuation metrics reached the greatest extreme overvalued in history of 100 years, going back to before 1929.
All right, so what does that mean exactly? Basically, it means that the whole stock market is way overvalued. And then you think, well, how can the whole thing be overvalued? Well, consider this. Consider that we printed a ton of money over the last several years, and that money needs to go somewhere. It can go into bank accounts and just put in savings, or, most people that are wise are going to try to invest some of that money. And so let's say that a lot of that went into the stock market. But would you say right now that businesses are doing better than they were maybe 3-4 years ago? Think about all the restaurants that you've probably recently heard close, like Red Lobster and, Rubio's. That was a great restaurant that I'd always go to. They closed a ton of stores. I mean, do you really think that the economy is to a place to support the highest valuation ever in the stock market? I don't know. Let's keep listening.
So that was impressive. And he mentioned July 16th, and of course, we've started to come down from there. Now, does that guarantee a top? Of course not. But the point is, Neil, where is the next 15, 20, 30, 40, 50% going to be? My evaluation of the upside potential from current levels is we have a 0 to 5% chance of going up 10 to 20% from here. And we have a 50 to 70% chance of going down more than 50%.
All right, did you catch those numbers? He said that we have a 0 to 5% chance of going up another 10 to 20%. And then he said that we have a 50 to 70% chance of going down by 50%. Now, I think that those numbers are probably radical, but I don't know. I'm not, nearly as much of an economist as maybe I should be. But what I see is I don't understand how the stock market can be sustained where it is right now. Because all that I see and what I feel is I feel this recession very strong. And I say that because everybody's trying to convince us that we're not in a recession, but truthfully, it feels quite like a recession. And a lot of the people that I talk with are mentioning that it feels like a recession. So I own like 50 single family homes, and I have seen a lot of the tenants that I have having a hard time paying rent. And not only that, but I'm also a therapist. And so I've had my numbers of clients that I normally will see go down by probably 25 to 50% over the last maybe 6 to 12 months. So when it comes to this whole we're not in a recession thing, I think it's garbage. I think that we're definitely in a recession, and I think that you can feel it. And so I have no idea how this valuation is where it is right now. And I agree. I do think that there's some things that are going to be coming down here pretty soon.
When you talk about overvaluation, in other words, the price of stocks simply don't match or in sync with their earnings that really support them. And that can't be sustained.
So that's what they're saying on the news. They're saying the price of stocks simply can't be sustained. And I think there's a lot of truth to that. And so what do you do? Where do you move your money? If your money's in the stock market and you don't want to ride this roller coaster to the bottom, what do you do? Where do you put your money? So one thing that I have done, or at least this is something that I've done for some of the people that have invested with me or lent to me, is, I have a lot of real estate, as I explained, and I have, equity in a lot of the real estate that I have. And sometimes I will pull some of that equity out and I'll go and I'll purchase another home or do something else with that money in order to invest. And so some of the things that I have done is I have created what are called second position notes on my real estate, where somebody will lend to me and sometimes they'll get a 10, 11, or 12% interest rate. Well, right now what I'm doing is called interest deferred notes. And so I have some notes that I'm paying, between 10 and 12%. And so I am having people that I know that have lent to me in the past, or that know me, they'll lend to me money between maybe $25,000 to $100,000, and I'll give to them what's called an interest deferred note. That means that it doesn't pay out until the note is due. So I'm going to create these notes for 24 to 36 months that are going to be performing at 15%. So if you know me, if you've been watching my channel, if we've chatted, if we have a relationship, then reach out to me. I have about 10 of these notes that I'm going to be creating over the next little bit. And so if you want a place to put your money that is better than the stock market, or that is more secure than the stock market, because this is all secured by real estate, and a lot of these properties have about 50% equity in them, and I'm leveraging them up to about 70%. So there's still 30% equity over and above the second position note. Again, if you know me, then you know that I have a great track record. I've done this for years, and everybody that's ever lent me has always got their money back, plus the interest that was promised. And so anyway, if you want an alternative to the stock market, and again, you know me, because this isn't, I'm not soliciting, I'm not trying to get anybody that doesn't know me to lend me money or invest with me. But if we have some sort of pre-existing relationship, then definitely reach out to me, because I'm going to be creating about 10 of these in the next week or two. And once they're gone, they're gone. So anyway, if you are invested in the stock market, I wish you the best. I say good luck. And if you want to diversify, go ahead and give me a call. And I hope that you have a fantastic day.